All right, here we go.
Welcome, everyone. Welcome to our show, live scalping today. Jonathan, are you ready?
Yeah, I I planned this. I planned this live stream on the weekend here, and did not check the news calendar. So yeah, we're gonna be scalping CPI. Nice, trading high impact news events. We're gonna be careful though. I mean, the rule says that we cannot enter a trade. Is it 2 minutes?
2 minutes before and 2 minutes after. You might not, you
Yeah.
should not be executing a trade, but that is only on the high stake accounts. If someone is on the bootcamp or the hyper growth, there is no such rule. So you are able to trade with no restriction.
Yeah, we're on a. I have both high stakes and
Today,
hyper growth. I'm going to be
today's my
trading the
turn.
high.
I'm feeling that sneeze coming, which does not want to
Yes.
come.
So today I'll be trading the high stakes today. So I'll be careful with the news event. Obviously, all right. What's
The,
up,
the,
guys? Hope you're all doing good. I'm in a long on EU right now. I'm going to show you what this is based on. Obviously, not in. It looks like it's gonna. I have to close this one, but I'll show you what it's based on. So it's basically on the 1 minute. We have this nice trend going here on the 1 minute. You can see very clearly the higher highs and the higher lows. I decided to enter on the worst possible area imaginable to so right on the breakout. But basically I'm buying that breakout. I'm hoping that it's going to continue higher. I'm going to close this trade if it comes down and forms a lower low. And then also, we go out, we can look at the 1 hour, and I have my TP is going to be at, let's see, at around these highs right here. So I want to exit this trade when we come up and hit this level right here. Where is it? It's, up here. So I'm going to be going in. I'm going to be placing, what's the actual price of that one? It's 77.13. So I'm going to go in here. I'm just going to do TP at 77.13. That's going to be my TP for this trade. I'm not going to put in any stop loss at this point. You know what? I should probably put in the stop loss, but I'm not going to do that right now. Actually, I am. I'm going to put it at 76.02. It's good to have that stop loss in so I can actually move it around. So that's going to be the trade. Modify.
How much is the stop loss?
Oh, too much.
But
Much
more or
probably.
less, I mean,
500. So I'm risking.
Okay,
I'm
okay.
risking. Why can I not remove that? I'm risking 500 to make 600. So right about 1 hour.
Okay.
It's a little bit
The
about
market is the trend is very, very strong. There's momentum to the upside. We are in a demand zone in my kind of way of looking at the market. Sorry, not a demand zone, a supply zone. But I expect too that it should not be much of a deal, since we had such a move down starting on Friday, Monday. So the retracement can easily break that supply zone in my eyes. So I agree with your trade, and also because it's only a scalp, you can allow yourself. It doesn't have to go that far to hit you. So and it's perfectly conceivable that this momentum, this move will have at least some kind of follow through, even if it's going to have a reaction from that supply zone, right? The
and I'll
A4
also,
supply
we
zone.
have. I'm going to be trailing my stop up with the 50 EMA. So you can see right here on screen, I have the blue 20 and the gray 50, and I'd like to trail my stop up with the 50. So right now we have, as you can see here, we do have a like a higher low on the 20 EMA, that is my sign to move the stop a little bit up. But I want to make sure that it's below that wick. So just moving it a little bit further up means I'm now risking 420 to make 600, and I think this is where I want to be. And when I'm taking a trade like this, I want to make sure that my stop loss initially is quite wide, so I have a lot of room for error. So I can move that stop loss around, and doing that most of the time, the losers will be on average smaller than 1R.
Okay, nice. No, very. I understood that. That's good. I will be scalping as well. I don't have in terms of my main strategy, which starts for the looks for the setup on the H4, starting on the H4. I don't have anything like lining up right now. Let me show my screen. Perhaps I can be more specific, more visually clear as to what I'm talking about. This is what I see in terms of GU. If we start on the daily, did I click on the daily? Okay, we had of course we had a huge move down, and we are reacting in the end with that daily order block, that bullish structure, which is not surprising. It did not react to the first one, if you guys remember, but it has, without invalidating this, right? It has reacted to this demand zone, so that's good. Actually, I mentioned yesterday that probably it's not going to go, because the ATR was yesterday at 720, and that's basically very precisely was the low of the day before it actually made it. So that's the power of ATR, using that indicator, which is very simple, and that's actually the only indicator that I use all the time within my trade plan. But going back to what I expect now, what we have is we still don't have on the H4, we don't have a shift yet. We don't have a higher high. This is still, it hasn't broken any, it hasn't shifted yet. So I'm aware of that. But I'm also aware that the market has gone very quickly to the downside without any significant retrace. So today, maybe with the news coming in, the volatility, maybe we'll see some kind of retracement being formed, and it makes sense that retracement starts from that daily demand zone, as it has been reacting already to it. And that's what I mean by this H4. There is a supply zone there, and that's why the market is kind of slowing down there. At least that's what I see. But I don't think that structure being an H4 is going to really stop that retracement from happening. At least we don't know, but I don't see that like very likely. We'll have to see how the CPI number comes, of course. That will change everything. But if you go to the lower time frames, we can see it is still, this is what I mean. There is in terms of market structures, you can see we have made that's not completely correct. Let me go. We have made a lower low, right? And we still haven't made a higher low. So the market structure is still bearish, but it's now much, much less bearish than it was yesterday, for example, or the day before that. So we'll have to see if it's able to break this. And if it is, then of course, as you guys know me, I will be waiting for a retracement before I actually play that move. But okay, that's something that I have in the back of my mind, but I don't have a signal or a setup on the H4. So there's really nothing to do other than sit on my hands and be watchful and patiently waiting for my signal. But in the meantime, I will be doing scalping, as today is scalping live. So yeah, let's look how the how price will develop in the coming 20 minutes to the CPI number.
Yeah. We have, if you look in the EU right there, it kind of looks like we have, it's not a perfect double bottom, but I do see, similarities with a double bottom structure where we have that, as you said, we have that high time frame level, that daily support area where we're now, price is reacting very nicely to that area. We have two very strong impulse moves on that area. So I do think that My target for the move that I'm in is still within those order blocks that you have right there. But I do think
Yes,
that looking at what we have coming up here, I think that there's a big possibility of seeing a move to the upside here, a pump on EU from based on the news.
I
Um,
agree. Yeah, I
so
agree.
yeah, we'll
I agree. There hasn't been any significant retracement, so I would say that it is really very reasonable within the realms of possibility of that retracement might be coming. With that volatility coming in from CPI. It doesn't mean it's going to change everything, but we could be seeing something easily, popping up, retracing the move from Friday. Not all the way necessarily, but at least plenty of pips to be caught. And that's why I think even though it is within in H4 H1 supply zone, I think it's your TP is very realistic. Very I could have been in that trade as well. um, so I agree with that
nice.
direction. And also,
So
if you
I
also this if you look at your trade from this vertical, the moment it made its that low from the swing, who has been in control? It's the bulls being in control, the
yeah.
buyers, right? There's that impulse you mentioned, the consolidation, and another impulse. So if you're scalping, right, you want to be in the team that is actually winning at this moment, right? And that is the buyers are gaining terrain, and you want to be on that side. So being a buyer, scalping to the upside is makes a lot of sense to me.
So I want to switch over to MetaTrader here and show you the position that I have open here. So you can clearly see that you have, the first higher low here. As I said, this is, my indication of moving the stops up to below this level. And now what we're having another sort of a break and retest where we broke the resistance area here. We're coming down and we're retesting this general area right here with a nice bullish engulfing candle on the 20 EMA. If this candle that we're printing now can push a little bit higher, test these highs right here, I will be moving my stops up one level higher. So you can see we have one level and then two levels, and then we have now a third level here. And with every new level that price reclaims and breaks above, I'll be moving my stops up. Now the thing is, I entered obviously at a terrible level. I entered a terrible price level. But for a trade like this, having the stop loss where I have, the entry is not super important. But where I really would want to have entered is on down here on that level. So you're entering on one level, and then when the next level gets retested, you move stops to the below level. So when this level here is getting reclaimed, I'll move stops down here. So it's kind of like you're taking it. The stop loss is always going to be lagging, one level behind all the time. And this is actually a great way of trading a trend like this without having a take profit. So you enter and then you just trail your stop loss up without having a take profit. Because if you look at this trend, if we zoom out here, you'll see that you have a quite nice trend going here. So imagine if you would have entered on, let's say, this bounce here, and then it moves up, reclaims that level, breaks out. Stop loss is now up here in profit, and boom, it moves up, reclaims that level, breaks out. Your stop is now here. It reclaims, it bounces here, and then starts breaking out. So you would actually have been able to move your stops up with the 50 EMA here. Now you might have been stopped out here, but if you manage to stay in the trade here, you would be in a very profitable trade. We're talking about 10, 20R, a trade like that. It's trading trends like this on a 1 minute, if done in the correct way and with low risk. And if you're able to hold that trade, and because obviously psychologically, mentally, it's going to be very difficult to be holding a trade like that, because you're going to be holding it for maybe an hour or two based on a 1 minute, which is, I can't be trading like that. It's insanely stressful. Just watching every 1 minute candle ticking for 2 hours. That's just too much, you know. But now we are
Well,
seeing price starting to break out here, and if we can get a candle to close above this level, that's when I will move my stops up once again.
yeah, well, one of the things you can do if you have, if you're watching and moving, trailing the market, your trade, and you're looking at every tick, you probably what you need to be doing is to have like strict rules. Unless it does this, I'm not doing anything. And so instead of focusing on everything the market is doing, price action is doing, showing you all kinds of information, you're only focusing one detail. Did it do this or not? And by making it that simple, you create more mental space to not be so exhausted after 1 hour of looking at price, because you're only looking at one thing, right? It is when you try to keep track of everything or a lot of things that you typically get drained by your mental equity gets drained for the day. So that's
Yeah.
one thing we could do to avoid mental drainage.
Yeah, mental
Exhaustion.
mental equity. You said something good there. I think
Mm,
yeah, that's very important. I think that's one of the reason why I'm not that into trading low time frames or scalping, because prices moves. It's like if I'm looking at the 1 minute, when there's before the 1 hour candle, I mean the 1 minute candle has closed, I haven't really taken in the information that the previous candle gives me, so I
mm-hmm.
like I like to move quite slowly, and I like to take it slowly in the market. I'd like, I want time to like reflect on what's happening, and I need time to digest the information. And
Yeah.
with the lower time frames, there's new information all the time. So before I'm processing the previous information, we got new information. So it's just new information is piling on top of each other, and it makes it difficult to take a good decision.
Yeah. It is. You have to be aware that you can only process so much information at any given time, and only for so long a period you can be, processing information. If you're aware of that, then you can, make sure that the doses is not too high and it doesn't drain you. That's basically what you're saying, right? You because you know what is for you manageable, comfortable, where you're still able to, perform well in terms of how much information you're getting in at any given time.
I
Eric,
think it's
Eric, go ahead.
I wanted to mention this one more thing. When I'm
Okay.
trading like this, I'm one important thing that I'm watching is the behavior of the trend that I'm trading, and this whole everything that you see on the chart here is the trend that I'm trading. But more importantly, you have this area here where you have equal highs. This equal high area happens prior to move lower, and this is really the only area where you have an equal high like that one. Well, we have another one, and that's actually the one we're printing right now. So if you look at
Mm-hmm.
the good moves, you have one high breakout, one high breakout, and then you have a high, and here you have some type of consolidation. But the moves I like to trade is when you have a high breakout, high breakout, high breakout. Now, when you have a breakout and then you have now we're actually testing this resistance area 3 times, and the feeling that I'm getting here is as soon as we break down here, I'm going to exit the trade, because now the behavior of the trend is telling me that the probability of this being the top actually becomes quite high. So if we break down here, I'll be exiting the trade, because then the behavior of the trend is different, basically, and
Mm-hmm.
it gives giving me clues that there's some signs of a possible retracement. But it's looking good, and we're breaking out. So now I'm just gonna move stops up if this 1 minute candle will close above this level, which it looks like it's going to do in about 45 seconds. But never trust a moving
Anything can
candle.
happen. Yeah, yeah. Never
Yeah.
trust the moving candle. I see your TP is at 71.3. Um, And
Yeah.
I see that the pivot point, the R1 pivot, is at 71.0. So that is exactly where the pivot is. So there's a chance it may react to it. Yeah, that's useful information, I think, when you're scalping, knowing those lines that market might react to it. Even if it's not gonna be the top, it can still react and cause you to if it hasn't hit your TP yet, cause you to think, oh, maybe I missed it, I missed
Yeah.
my TP, because sometimes it reacts to that pivot level, to the pip, I mean to the pipette almost.
Mm.
But that's a great place. If you were like a couple of pips above that, I would exercise some caution, because but you're right at it, with a difference of only zero point 0.3 pips. But yeah, I think it's a nice trade. The only thing is that CPI is coming up, and I'm sure you will not be holding that trade through CPI, or would
No,
you?
I'm so the 1 hour candle closed now, so I'm going to be moving stop loss up here, which means I am now risking $120, and I'll
Hmm.
be closing this in uh, I'll be closing this in about 4 minutes. So
Hmm.
we'll see. I want to make
Nice.
sure that I close it before. Now, one important thing, with the with the news trading rules, it's I believe it's 2 minutes, or no, it's a 2 minutes before,
Yes.
and is it 2 minutes after as well?
Yes. Within
Right.
that
So
4-minute window, you're not allowed to
yeah,
execute.
but that's only entering new trades. So you can move your stop loss, you can move TP, and you can exit positions during that time window, but you can never enter new positions.
Yes, that is correct.
So you know what? I'm actually, let's see. We have, yeah, okay. So what I'm gonna do is I'm gonna close this trade here, and then I'll open a new one after instead, because yeah, it's I was just looking for, to take some profits. Now I was hoping that this move. So basically, I entered here because I was hoping that this move would, continue higher and take us higher way earlier than what it did. So now we're at 23, which means I'll wait 2 minutes after the news event to see if we can. Um, because you see here, you have so the retest of this breakout area is happening right now, and there is of course the possibility of that retest happening, and we're trading down here for a couple of minutes, and that would mean that we're down here, um, right when the CPI happens. So if I'm able to take some profits up here, minutes before CPI, then I'll do that, and I'll get out of the trade
I,
and be happy about the profits.
Yeah, I think your exit is perfect. Not only because the market is reacting after it, but if you wait for the last minutes, you may not have. Sometimes the market doesn't give you what you want. In those last minutes, and it's better to just take anything that looks good enough before the news comes in. Because if you keep on waiting, it may only become more erratic. And if you have some decent profit and you're trying to time your exit, just take it. I mean, I think it's very very good what you did there. Exiting,
Yeah.
even if it before the news it has a spike and goes to your TP, it's fine, because what you did was you recognize that those few minutes up to the news can be the volatility can start coming in before the news comes out, and that may be not in your favor. If it is, of course it's good, but it may also not be in your favor, and you had some good profits already, so it's good to just take it.
Yeah, and
there
looking at
there
price action now, I'm happy about that.
Yeah, it's perfect. Very nice state reading there. Eric asks of our prediction for CPI. Do you have any prediction on CPI, um, Jonathan?
No, I haven't researched this at all. I haven't prepared for the CPI at all.
Hmm.
All I'm doing here is I'm just watching price action. I got no no expectations or predictions at all on CPI. What I can say is, if we're, looking at, let's say, EU, what I can say is we are at high time frame support. And usually what happens is when we're at high time frame support, the news comes out, we a lot of times will see a bullish reaction. But that's the only thing I have right now. And what's interesting about this live stream is the fact that we always say, you should not be trading news, you should not be trading high impact news events. But I want to also show you guys how it should be traded if you have to trade it, with low risk, with active risk management, and wait until the massive volatility is over, and then try to see if you can find any entries based on what price action is doing.
Yeah. If I may answer the question, I don't look. I consciously not look for to have any opinion or prediction about CPI, because I think my time is better spent doing what I know I can do, which is reading price action, and getting a reading to assess the probabilities of macroeconomic news releases. That's something completely different, right? So you got to know what you know in terms. That's how I think. You got to know what you know, and also know what you don't know. And I think that's not my strong suit. So I prefer focusing on things that I know and I know well, and that's price action. So I let the price tell me whatever, if it is positioning bullishly before the news, then I might hold a trade or hold a part of it, but I won't be having any idea of what the actual news release, the number that's coming out will be. And I that's fine. I that you don't have to know what the news is. You can just avoid it and keep trading through it if you're in the higher time frames. And if you're scalping, you got to know when the news is coming out, so you avoid it, because it can change everything on a dime, and you don't want to be in that position.
So we
2
have
minutes.
not many minutes left. 2 minutes. Yes,
Yeah.
we should probably. Yeah, like I'm gonna be focusing on EU, and I want to try to get in on a trend here on EU, and to make sure that I get everything, to make sure I can enter orders as quickly as possible. I'll be doing it in MetaTrader,
Okay.
because otherwise I had to switch back and forth between
Okay.
MetaTrader and
You can also use the DOM. Have you like using the DOM for your entries?
uh, no, I don't really do that.
Um, right after the first icon on every chart, there's like two colorful boxes. The first one is it can pull up the DOM, and there you can buy and sell with fixed stop loss and TP. I'm sure, and that's helpful, I think, for getting in and out of the. Saul made me realize that. Thanks to Saul, credits to him.
Right? Maybe you could. Yeah. Maybe you can show me that later.
Yeah, I will.
But I think what I'm watching is I'm watching. So this is on the 4 hour. Now I'm watching this area. I basically went along up to that level, and I think we can look at the wick here. So we're looking at a scalp to kind of front run that level right there. So that will be on whatever trade I'm taking here. That's going to be the TP. So I'm going to wait for the news, and I'm hoping that it's going to be a long trade. Now, if we're going to be looking for a short trade, I'm honestly not really sure where I want to look at taking profits. But on the 1 hour, okay, so we
Oh, look
got
at that.
nice. That is a big move right there. Okay,
Yep.
so yeah, that is a
Look at that on the
big,
1 minute. If
big move.
it's
Yeah, right.
it's
Okay,
huge.
so should should have kept that trade open. All right,
No, I don't
that's a
think so. I
massive
don't think
move.
so. No, no, I don't think so. We should not be tricked because this time around it came in your favor. It's better to
Yeah.
be, making those small steps. That's what scalping is about. It's not about catching necessarily that big move,
Okay,
especially if you
this
don't.
is a massive move. Now,
Yeah,
um, now what I would want
nice.
to do is I would want to look for a retrace of this move, and
So
when price
50
action
pip.
has stabilized a bit, I will be looking for possible longs, depending on where it stabilizes.
Mm-hmm. Very, very nice move. Like it a lot.
So inflation is lower than expected, which is obviously bullish. This is a risk. So this is a real move. This is a risk on move. We're seeing dollar is moving lower, which is resulting in obviously EU moving higher. It's insanely volatile when you get moves like this, because obviously we had a risk off move last major news, and now we have inflation data giving us information of the reversed basically. So
Yeah.
well,
While EU hasn't broken any. Let me show my screen, of course, if I may. Are you? Would you like to show something you're just about to be doing? Because otherwise, I would like to show the structure on the higher time frames
yeah,
on.
go ahead. You go ahead. I'll be monitoring this on a 1 minute. I'll let you know whenever I see something worth trading, and we can switch over to my screen.
Okay, but before I do that, let me put things into right perspective. Okay, now it is. Let me open this up.
Wow, look at
And
GU. Look at GU. That's insane.
yeah, it's that's what I was going to like in EU. This is only a few minutes, 2 minutes into the news, and it is going. Well, obviously, it's going up. That's an impulsive. That's the news, but technically, it hasn't broken. It hasn't come near this area yet, which is the supply zone. This is the area that becomes interesting to know. Is this going to shift the market back to bullish? As it, we had that shift from started from Friday. But if you look at GU already took out that structural high, those supply zone that was left behind by the news. So that's a remarkable change that this has already at broke those structures, and that's the difference between the bullishness comparing GU and EU. I think that's significant to be aware of.
Yeah, okay.
All right, I haven't had any trades. If anything, I'm looking at GU to this is a very exaggerated trade, and I mean move. So I'm looking to fade it at the first sign that it reached some kind of um, temporary top, and there's nothing since this whole
Wow.
area has been taken out. There's nothing to the left, at least not to the near term left for our reference where it can stop or be have some kind of reaction. Of course, we have these highs, right? You have this and you have that consolidation that might give you an idea. Okay, price might react to that, but it's so far back. I don't know how relevant that might be.
I
Let's
feel
see if
like
we can. Mhm.
do you feel like when you get a move like this, do you what's your initial reaction? Do you want to get in on a move like this? Do you want to follow the move, or do you want to fade it?
uh well, both of them actually, but if I can the move, what it tells me like this is that who is in control, right? So I want to be on that side. But what I don't want to do is just buying at any given time. I want to see it have some kind of retracement, form some kind of a structure, and then I want to be in the direction of the initial move. But before it does that, I would like to see. It's likely because I expect it to be or assume it is an exaggerated move. I assume that it will exaggerate and at some point puts in a, I will show you perhaps with, uh, let me see, this is a H2 order block. Let me, before I do that, and there is a, on the top side, there might be a, I think there wasn't any H4. These are not areas that I actually trade. And there's actually a very nice um, order block here that could be could have some indications. These are not the typical setups that structures that I use for my setups, and they're not as accurate in telling you where on the H4 there's nothing here. So I'm not too keen on reacting, but these are these structures, and the H2 is a bit lower, but that's fine. Okay, so I'm gonna identify these with the corresponding time frame, so I don't get, I know which one is which. But let me show you what I think, what I want to do when I see those. Okay, so we're coming near to one structure, and if I'm scalping the news, I'm only expecting a little reaction. So it doesn't have to be a big thing. It's not like I'm going to fade it all the way down. That's not the idea. It's only just I know that here there is a possibility of a reaction if
Okay, I'm
start
long here.
seeing.
Just wanted to make sure that people get that. I just went long EU.
Mm-hmm.
Because
Very nice.
I'm just going long on the very first bullish reaction on the. If you look at the 1 minute,
Okay.
the very first.
What I was going to say is that you asked me if I see this, what do I want to do? Do I want to fade it? Do I want to tag along and go with it? Of course, this who is in control? That's the question that I ask, and clearly, the market is on, the buyers are in control. So if you're going to hold for something that for a longer term, not longer term, but for a longer period, of course you want to be long this, no question about that. But the question is, where do you enter? After such a move, it's kind of difficult, I think, because if you enter here, where do you put your stop? If you enter, let's say right now, where do you put your stop? There's nothing, there's nothing in between, the current price and where it started to give you any sense of security of where to put your stop. So there is no way to put your stop, sensibly. So what I would like to see is some kind of reaction, something like this, and then when it breaks this, then you have some idea. Okay, this could be the continuation, and then you could, at some time frame, you have some reference where to put your stop. But in order for that, you need to wait for the market to retrace a little bit, form some kind of reversal pattern on the lower time frames, and then you can continue with the original move. And the other thing that I see is that, well, not that I see, but how I trade this, I said both ways, because as long as it hasn't done any significant retracement, what is this can continue without giving you any chance, and that's fine. If it does that, then I will not participate. But if I see some kind of reaction from, let's say, a structure that I think might have some kind of reaction, and it comes back and it does like a double top and breaks perhaps that low, comes back, all right, that's the moment I can be able to I can fade. I'm not going to hold it very long because it's against the initial move, but you can take a maybe perhaps to a something like this, to some structure that you see that may have been a supply zone that is now turned into a demand zone. That is the only. So I say both of them, depending on what has the price done so far. Something would be something like that, putting your stops above here, and not going for a lot, because you really don't know in advance how far this retracement could take you. And it can go all the way down, but you don't want to be in the market against that kind of reaction to the upside. If you do it with small risk, aiming for the first FTA, and that's it. Don't try to be a hero with it. If you go to the lower time frames, okay, we have the first order block being formed and you see how it comes back and reacts to it, if you're really aggressive, you could have, be in the trade with that reaction. It forms that order block, comes back, and then moves away from it. That's the order block. That's the order block concept that I trade all the time. But this is only on the 1 minute, and it's not very, it's flimsy in terms of is this enough indication that the market will go much lower? I don't think so. I don't think it's a lot. It's not a lot to go with in terms of reason. It's much easier to just wait for that retracement, as I said, let the market give you more information. And when it breaks that, starts switching back, then you can look for your entry on a something like this, on a perhaps not on the breakout, but let it come back a little bit lower, and use your structures, your order blocks at the lower time frames to get a reading and targeting that last high or higher, if depending on the time of the day, the range it has been already has traveled already. Yeah. Let's see.
Yeah, I'm
Right,
thinking,
that's a
I definitely want to. So I'm closing that position. I'm waiting for
okay.
a move, because now it kind of looks like on the 1 minute, it looks like it's going to break down a bit. So I'm waiting for price to come back down, and I want a nice reaction. I want the bottom to be formed here on the 1 minute to enter on a possible next leg to the upside. But we have a lot of room to the downside. But on the lower time frames, we are forming a support, a very very local support here on the 1 minute. And if we break the highs of this move, I think we're going to come higher. So if we can break the high of the CPI move, I think we're going to come higher, and we can then use the support as a stop loss level. So that's what I'm watching. I'm also looking
Have you
at.
seen have you seen the reaction to that swing low? It's to the pip. That's not a coincidence, of course. Yeah, that swing low that was broken comes back, and that's where the market reacts.
What would be your target if this move continues to the upside from this area?
On EU or
Yeah,
GU?
EU.
EU. Well, you are already at 93 on the ATR for today, while the average is around 56, 60. You're already at 150%. That is a lot. So I
Yeah.
know it can go on, occasionally with high impact news, it can go to 200, 250, but it's not typical. It does happen. If something is very, very, a number comes out very surprising, it can go to above 200%, the ATR. But the higher that range gets, the less likely it is to occur. So you already are at 150, and it can easily go more. But I don't have. Well, you have the weekly range is at 845. 845. That's the weekly range, and of course, you can argue that today is, this week being a Fed meeting. Tonight we have Fed meeting interest rate, right? In about and we have in about, what is it? In about 5 hours. That's very significant. We had the NFP that was very brought a lot of volatility to the market. That was on Friday. That was last week. But still, you can argue that this week could be more than 100% the weekly range. And the weekly range is currently at 845, depending on the number you have for the calculation. So it can easily go a little bit higher, but as soon as it starts getting into those structures, I wouldn't be eager to hold it much longer, because from here, I start getting a fear of heights in terms of, how much it has already traveled. it's so extended on the weekly, and it can continue, but it can also, retrace very quickly, and your gains can be evaporated. So I would think, maybe peel a little bit at the weekly ATR from your trade, and perhaps as it's coming into those structures, have the peel a little piece back, and you may or may not leave something open. I wouldn't be too eager to leave something open unless I have like higher time frame telling me that this is a setup as well, and I don't have that. Since we had a shift on Friday, I'm not convinced that it's shifting back to bullish necessarily, at least not on EU. On GU, you could make that case because it's breaking that structure. But even that, I mean, this is just one big candle. It doesn't give me enough information in terms of where do I put my stop if I'm going to be holding this. I don't have a stop. Where do I put it? Right, that's I need to always, we need, as trader, we need to be able to define our risk. I can define my risk other than, where it started, at least not right now. If it were to do something like this, okay, in that case you have somewhere, to put your risk at either these swing lows. You could say, okay, I'm going to put my stops between these swing lows, because if it does break this, right, these swing lows, it does break it, then it's going to, change the market structure. But we don't have that. We just have one big candle so far, and it doesn't give the means, at least to me, it doesn't give me, any way to define the risk, and we need to be defining the risk. Otherwise, you know the risk can be so much more than you think, initially, because when it starts
So,
going against you, that's not the time to be thinking where you want to be getting out. You have to decide that in advance. So
so
if
yeah,
yeah.
I just wanted to show you. So the 1 minute, the 1 minute 20 EMA is now catching up to price. So this is what I want to see. So I have a long trade here up to the next resistance above. So basically we have this move. We're now consolidating above, and we have the 1 minute 20 EMA, catching up to price. So if price breaks this level to the upside, I'm going to use the same principle as the last trade, where I move stops up with every new level getting reclaimed. So if you reclaim this level, I'll move stops up a little bit, and then if you reclaim this level, I'll move stops up to break even. And the target here is one. So I'm risking around 420 to make around 600. So a little bit above 1R. And the whole idea is based on the fact that the 1 minute 20 EMA is now catching up to price. You got this consolidation, and the thing is, when you have a move like this, you got consolidation happening up here, and then a big gap to the downside. We also have a decent shorting opportunity where you have if you get a break and retest of this level, maybe a break and retest up to 20 EMA, that would also be a potential short to take this move to the downside.
I mean, it does both of them a lot of the times, right? Sometimes, the market keeps on going without a lot of retracement, but fading can also be very, very profitable, because the market tends to go back from where it started. The only thing is, when will it be doing it? Will it be doing very quickly, like within an hour, within 2 hours, or is this something for tomorrow? A lot of times you will see a big spike and the market is very, very strong, closing very strong, only to see the next day that it retraces most, if not all, of that movement back, and maybe it takes 2 days. But you think, when I see this, I think all of those people who said, no, this is going to the moon, this is going to
Yeah.
the next daily level, and only to see that price 2 days after just slowly coming down back to where it started. It can be very frustrating, and you gotta, see that a lot of times to understand that that's part of the game. That's how it moves sometimes.
Yeah, and
And
if we had a question here. Yeah, I did miss out on. Yeah, I did miss on a lot of money. I'm. I'll if I make a quick calculation, I'd probably missed out on probably three. probably 3.5K.
Yeah.
But
How many coffee
on,
machines can you have been bought by that?
yeah, the thing is, if you flip it around, I think I risked 600 or something. Now, I think I risked 500. So if you flip it around, I mean, a move like this, to be caught on the wrong side of a move like this, that 500 could easily be 1,000. So
Yep.
yeah, it's not worth it. Having a 1R trade turn into like a 3R loser, that's
Yep.
not worth it.
Yep, yep. That's the real calculation you need to be doing in terms of risk assessment. It's not the stop loss, right? It's not. And if you have a tight stop loss, so it can be many more times. Like in my case, my stop
Yeah,
loss is only a few pips. So if something like a big news event moves gaps 30 pips against me, and my entry or my stop loss very close to current price before the news comes out, that means that instead of 2 pips stop loss, I get filled at 25 perhaps or 30. That's 15 times my risk. That is not worth it, right? Uh,
yeah,
um, so you have to see primarily in risk management. You have to focus on the risk before the profits, and if the risk is too much, there's no profit that justifies that.
so I think the most likely thing that we're probably going to see here is price is going to hit these highs, and then it's going to move back down. I think that is the most probable thing, in my opinion. So how, because that makes perfect sense. You have a top, consolidates, it's now a range.
Mm-hmm.
For upper ATR, okay, yeah,
790.
we're well above
790. We've passed that already. So that
well
tells you
above
how
that.
strong this move has been. It's very,
Yeah,
very strong. I agree with you that swing high, that initial swing high, that's the line in the sand to tell us whether we will have a continuation or not. To me, right? Because if it breaks that tells everyone, okay, this is gonna continue. And if it can break it, or if it breaks it, but then comes back violently, showing reversal patterns or reversal candlestick combination. To me, that's like a fake out of the break of that swing, and that could be the beginning of the move down. So to me, I agree with you. That is the line in the sand where you could assess whether this is going to continue to go or not. It looks very, very strong right now, and who knows? We'll have to see if we will see a continuation or not. But I mean, this is strong. It's looking very firmly there.
yeah, I'm gonna be closing this one. So when I say something like, this is the most probable move, to trade against that is not what you want to do, because sometimes you get in the trade and you're getting new information, and I'm
Hmm.
watching this, and I'm in the trade, and I say the most probable reaction is probably to get rejected at these highs right here and then move lower, and either we're going to break out, and if we do break out, I can look for a break and retest and wait till the 1 minute moving averages kind of starts to catch up more with price.
Hmm.
But what I think is most probable now is for this red line to act as resistance and move lower and perhaps start ranging around here. So we have a very clearly defined range here on the 1 minute. And now when we have this type of price action, and this is actually answering this question as well, with the user here asking any tips to trade after a big news event, when to get in. You need to wait for price structure first to form. So when we only had this, we had no price structure, but now we're actually forming price structure on the 1 minute. So now we have an area where we can manage risk. So everything is about finding invalidation levels for your ideas. So now we have a what I would call a consolidation range after a big move, right? So now we have a clear invalidation of longs and clear invalidations of shorts. And this is where you can start to look at building a position. But this is on the 1 minute. Now we go out to the 1 hour. There's nothing here. You cannot be trading this based on the 1 minute. You cannot be trading this based on even the 15 minute. There's nothing here. You can only trade this on perhaps the 5 minute and 1 minute. No, not even the 5 minute. This is on the 1 minute. You can trade this, which means that if you can only trade a setup on the 1 minute and there's no multi-time from analysis to be possible, then it's very risky, and that's, you're trading against you're trading against a major move here. But you see that we're reacting to this level as resistance. It's a very weak reaction, very small bearish candle, and if we break out here on the next candle, that means there's a lot of strength here. This move wants to continue. You have the initial push to the upside, you get price consolidating and then pushing up again, which means that there's a lot of people who wants to get in on the initial move, because let's face it, the initial move is usually not the right move. Unless we see something like this. We see something like this, then the initial move is definitely the right move, in my opinion.
Yeah, well said.
I think this is going to continue higher, Victor. I think this looks very, very strong.
Yep.
Surprisingly strong. It's been a while since I saw a news event that just continues moving. Because it's been almost 30 minutes and we're still bullish.
Yep.
It's impressive price action from EU here. Look at that 1 hour. It's crazy. But looking at this on a 1 hour, it is so obvious to me that we're straight into resistance, and there's a lot of work to be done here to come higher. Technically, is logically looking at price structure, is looking at this from purely a technical perspective. We should not continue much higher.
The thing is also the rate at which we move, right? And it has moved a lot very quickly. But it the market can remain. How is the saying going? It can remain.
The market can remain.
What was it? Illogical, erratic.
Yeah, I think illogical longer than you can stay
irrational.
solvent.
It was irrational.
Irrational, yeah.
Yeah, more longer than you can withstand your so an exaggeration.
I'm sure someone in the comments is going to give the perfect quote in just a minute.
So
wow, it's actually breaking.
The market can continue to be in that exaggeration mode, and it's difficult to know how far, especially if you don't have any reference points on the, let's say, the hourly, the 4 hourly, etc. Because
okay, I'm getting in here again because this is actually the price action that I wanted to see for that breakout. Okay. We're pushing higher. There's really no signs of that initial reaction being very bearish. Now, of course, I will close. So this is a 3-lot trade, which means I lose. I have my mental stop down around this area. But if we break the local structure here, I'll exit this. So this is the level. We have now reclaimed the third top level. If we come down and we break below the second level, which is also where we have the 1 minute 20 EMA, I'll get out of this position. On overall, I should be in profit today with the first trade, and then this long that we closed. Hopefully, we'll get a push to the upside here. And now I'm just looking for. I'm just looking to take whatever the market has to offer here. So I'll see if we can get a small push to the upside. Probably close it at $200, something like that, because we are again at major resistance right here. But and now it kind of looks like we are Yeah, we're still hitting that resistance area. So let's see. If we break below the 1 minute 20, I'll get out of that one. And I should be in like a $300 loss or something.
Mm-hmm.
But so what you want to do is you have so you got CPI and then you have F1. You got FOMC later, don't you? Or is it?
Yes. Yeah.
Yeah,
We have
and
in about 5 hours to be exact,
yeah.
because
So
that's the turn of the hour right now.
from my experience, you usually retrace parts of the CPI move during FOMC.
You can do a lot of studies on that. What's the reaction? But it's I, uh, and I think there's edge to be extracted by doing those studies. By looking, for example, what I do like to see is study the ranges. What is the average range? What are the extremes of the ranges in terms of different kind of news? Because that will give me an idea: is this extended? Is this very exaggerated? Or is this normal? Because news is completely different in terms of what is normal, right? What is normal for news events that day is not normal for a day where there's no news. So you need to shift and have current reference points. What is reasonable to expect from a news when it does move like this, a big news? And that's where it's handy to have an idea what is when it has a very surprising news, and it has like it had right now a 60 pip move on GU, a 50 pip move on EU on the first few minutes. I think that's the description of this move. So very powerful, considering that EU's D1 ATR is around not much lower than 60, and it did almost all of that, 95% of that or 90% of that, within a few minutes. So that tells you a very explosive move. You know, and the question is, how far can this go? And you can go back in with historical data and look for those big movements. How many times does it retrace? If how many times does it continue? When it continues, how far typically it goes? And if you have those numbers, then you have some data, and that's what you need to be able to assess. How far can I take this? What are my probabilities of it fading tomorrow, later on, before FOMC or not, within 4 hours? You can ask yourself all those kind of questions and let the data tell you what the odds are of that, and you play the odds, and that's it. It's so there's a
Yeah, and
lot of
it's
edge to be held. Only I don't have time. There are so many questions, so many things I want to investigate, but I don't have a team of researchers to help me. So I need to focus on what is the best buck for my time. What gives me the most buck for my time in terms of what do I want to investigate? What question do I want to be answered? So yeah.
and things like that. It's quite simple to test as well, because you have all the
Hmm.
news events happening. You
Yep.
have you have all the data you can look at. You can just go to Trading View. You can go into settings and
Hmm.
go to news, and then tick the box where you show all the previous news events, and then you just go by and look at the charts, and you see it's very simple to find statistics on that.
Yeah, and a lot of replay software also, they're able nowadays to show you to include with some kind of indication where the high event happened, and you can identify them quickly, and you can do back testing on them, even if it's just for measuring them without really actually trading. You're actually just ask yourself this: and what is the average price or movement before news 4 hours later? And you will have some data on that, and that is something very simple, as you said. It doesn't have to be complicated
So
at all.
we're testing the 20 minute 1 minute here for the first time since breaking it to the upside in the beginning of this move. So for me, this is where I'm going to be looking for reaction. A bullish engulfing candle here. If this is going to close as a bullish engulfing candle, then that would be perfect. That's exactly what I'm looking at. And then all I'm looking for is to break these highs to start securing this trade. And at this point, I'm risking it's about 1 hour. No, not at all. I'm this is way less than one hour that I'm risking here. So it's no, actually, I'm risking 1 hour to make half an hour.
Okay. The someone in the audience had that saying that we couldn't come up with or remember. The market can remain irrational longer than we can remain solvent. I think there's a lot of wisdom in those in that phrase, because that's that's so true. And that's the thing with exaggerated moves. You think this is exaggerated and it may not go further, but it can. And they are, outliers. It can still do. If you think this is too much, it can still do another 50 pips. Even if it's not
Exactly.
likely, even if it's not likely, it can happen. At some point it will happen. And it's just a matter of time for it to exceed your expectation, or even what you measured. Even if you measured it in the past, there is still a chance that it will do something that it hasn't done in that period that you measured, right? Because anything is possible.
And I think today's session was actually a really good example of how we can trade the news, without because you know there's so many people losing accounts during these news events. Like
Yeah,
there is an insane number of it's a huge problem. So guys, like I'm
it
I'm
is.
showing you this that it's possible, but I'm using a 3 lot position on EU 30 minutes after the news. Okay. The news has happened 30 minutes ago, and I'm using a small position. I'm risking 0.25% on this. It's so incredibly, dangerous to be treating the actual news event or the actual news release. And what I mean by that is setting up a trade where you're expecting a certain move based on the news. That's basically,
Yeah.
I'm not saying, trading within the 2 minutes of the release. What I'm saying is setting up a trade and hoping for a specific move on the news event. We have so many people losing accounts based on that. So it's a huge problem. So the best thing to do is not to trade the news at all. And if you're going to be trading the news, you don't want to be trading this move. Okay, look at what I'm doing. I'm trading the price action that was created based on the impulse move. You never want to trade the impulse move, because you'll get stopped out. You'll lose more than you are going to risk.
Yeah, those are wise words. What you said there, you best thing is not to trade the news. That's actually the best advice you can give to mm, not every trader, but most trader. They're better off not trading the news, because it's so unpredictable that, as someone just mentioned, it is, is close to gambling, because as we have been talking about, definitions and gambling, what is, what isn't, you know you're actually playing a game that you don't know a lot of. It's very unpredictable. I think it's so difficult to have an idea which side the news will be. And you can be right a couple of times, but one time it can go the other way and completely obliterate your account if you don't watch out. So I think the best thing, if you want, and you want to be cautious with risk as a trader, the best thing is not to trade it. I mean, the actual have your position open actually when the trade is on, unless your stop loss is so far away that it's not relevant. Um, but most people's stop loss will not be 100 pips away, and so to most people it's a lot of risk, and a lot of uncertainty, and you don't want that to have in your trading. But there are ways to trade it. If you are confident about price action, you can trade the price action up to the news and after the news, right? Not necessarily in the news. And what you did today, Jonathan, I think is a great service, because showing that you are able to navigate the news around trading around the news is something a lot of people are not doing well. Numbers tell us that.
Yeah, I think also when I'm, with my swing trading, if I have a, 50 pip stop loss and a 200 pip profit or something like that for a swing trade, and I'm in, 50 pip profit. So the stop loss is like 100 pips from current price.
Mm-hmm.
If it's FOMC or US CPI, then I might just close the trade. But if it's other major news events other than the I think it's CPI and FOMC that are for me the two major ones. Um, other than those, I can keep the trade open, but I'd like to close the trade if
Well, the thing is, you have to be aware of what is the possibilities, and in order for that can come with experience. You can, but it can also come simply because of studying, as I said, the ranges, what is typical, what is the average, what are the extremes, and to get some idea. If you don't have those numbers, those statistics on the possibilities and the different scenarios, it's very close to gambling, because you're doing something that you don't know what the probabilities are, and you shouldn't be doing that as a trader. You should be taking calculated risk based on some kind of a data that you measured and that you think you have an advantage. Only take those trades that where you measure and you know you have an advantage. What we talked about yesterday, that's the only power you have as the trader, selecting those moments you want to participate in the market, not just go with every move because you think you as a trader you need to be in every move. It doesn't work like that. uh, it's already difficult to have one strategy that is profitable, and if you think that you're able to get in and out of every kind of scenarios and pull profits out of the market, is just ludicrous. It doesn't work like that.
yeah, I'm very focused on this trade right now. It's difficult to
Yeah, by the way, there is something to be said. If you're trading news or if you're watching news and you want to read the price action, sometimes the EMAs on the 1 minute are too slow. um, to depending on how fast and what kind of trade you're trying to take. But 1 minute, the EMAs on the 1 minute may be too slow, and then you can look for something on the sub-minute range, something like the 15-second or 30-second, just for the couple of first few, let's say 15 minutes, 30 minutes. Right after that impulse, the first 5 minutes. 1 minute is so far behind, it's not giving you much information, which lower time frames EMAs may be able to do that. But I think that's kind of advanced, and as a beginning trader you shouldn't be focusing on that, to be
I
honest.
think what's best is you look at the 1 minute and you wait for the 1 minute to actually catch up.
Yeah. All
And
right, so
but
we have made a on EU, we have made a higher high, right? We have broken it, but market, it seems to be consolidating a bit lower than that broken that initial that that resistance it broke from previous swing high, and we'll have to see. It's now it's let me get uh my on perhaps. I'm looking at EU, but that's not the screen that I want to be sharing. That's not the one that I have yeah, this is it. Let's see. While you focus on your trade there, I will show mine. All right, so we have EU, and as you can see on the 15-minute, there's nothing bearish about this. There's very little information, but so far, there's nothing bearish about this. Of course, it's a 15-minute, so it doesn't give you enough information, but a lot of information.
it's
But
crazy
as you
how
can
strong
see,
it is. This is
it is
very strong.
Yep, it's very, very strong. So, what I meant was that you have this line with actually a line from which is a flip line, right? It's a swing low that the market reacted to it previously, like the first that was the first indication, first impulse, reacted to it, and now it for on the lower time frames, it did. There was, you see these wicks, those that's reacting of that level, and but it hasn't. Well, this is the reaction it has had, but as you can see, it hasn't. If it were to do this, right, making lower lows after after squeezing this level, then that would be a sign that perhaps, it might be even lower, forming bearish market structure. But it's not doing that. Instead, uh, you could say it needs to take out this first for it uh, to be valid. But it is for us to consider this a higher swing low. It isn't yet, but it is. If you look at that microstructure here within that swing, it looks very very bullish to me. And I mean, look that candle. It's only a 1 minute. We're not talking about something that is very significant on other time frames. It's because it's only 1 minute. But this doesn't look like it wants to stop right here. It's making the swings are very strong. Let's see. All right, so this is
What's the level you have?
the
What's the first yellow level
these.
you have right there?
No, that's just I circled the blue line. This is
Oh,
the weekly ATR.
okay.
That's the blue line is the weekly ATR. So when it gets there to the weekly ATR, I expect some selling pressure coming in, but we're quite far from it yet. That's about what, about 15 pips from where we are, and after that there's the order blocks coming up at around 66, starting 66. I have no idea if it's going to go that far, but it could. I mean, it has all the ingredients to continue. It has a very very bullish impulse, and it has very minimal retracement, meaning the buyers are very firmly in control, and that can continue to be so. There's no reason why it doesn't have to retrace. It doesn't have to do that. Um, it can continue to go, and if it does, these levels are logical next step. There, I don't see anything.
That's my TP. I think that's my TP. The blue line there.
Really? Okay,
Yeah,
that
around
this
that
is
area.
at
What price
45.
is it?
It's
45. Okay,
40.
no, I have it on.
Yeah,
I got my TP lower,
45
but still
6.
it's around the area.
Mm-hmm. It depends on the value you use for calculating the weekly range, but it is around 45, 46, 48, actually 38. So it is around that, depending on the value you use. So I would say around 40 to 45. So we'll have to see, but this is looking uh, still strong. And GU, let's look at GU for a little bit. Okay, this is looking a bit different. Now I
Wow.
see, yeah, this is looking a bit different. Remember, I identified that there was from far away from to the left, there was an order block there. I don't like to use those kind of structures for my normal trading because they're hit and miss. Sometimes the market comes to them and reacts to the pip, but a lot of times it doesn't care about them. So that's why I don't trust them too much. But since I don't have anything else in terms of structure and reference, this is the best thing I got to go with. And price did not have a problem at all, printing above it, right? So to me, this structure is very not significant. But what we can see is that after it broke this, it is sort of decelerating. I wouldn't say coming down yet because these swings are still a bit higher. It still has a slight bullish tone to it, and this is what we have currently, right? We have a higher high and higher low, but you can see obviously that it's having difficulty continuing. So we don't have enough information if this is just a consolidation before it continues, which is likely since so it's so impulsive to the upside. But this could be the beginning of a little retrace. Who knows? Maybe into some other structure, maybe to that swing low, or maybe that bigger structure. something like that. I don't know. We'll have to see. But this is, if you look at, for example, on the 3 minute, you can see those bearish structures being formed, right? The bearish engulfing, it comes back, reacts to it, and looks like that order block on the 3 minute, it's doing its job, but it's only a 3 minute order block. So it's not a big deal. This can only be a temporary uh, supply zone until it absorbs it and just continues up. If it starts showing it on the other time frame as well, then we have something, but we don't have anything. Look at that. There's that supply zone laying there on the 5 minute, and that could be a logical place it goes to before continuing, right? This is on the 5 minute, but it's just one indication. I wouldn't, trust it that much.
That could
What
be a
else do
good
we have?
level, for short. If we break that low time frame structure on the upside, then
Yeah,
take that 5 minute order block as a profit.
sure,
Actually,
indeed.
GU on the 5 minute is actually, yeah, looks like a shorting opportunity.
Yes,
So
but it does. But the same token, I would say watch out, because it can have those another rip to the upside, since because you're coming from a so explosive impulse, and it can have like a continuation of that, even if it forms five, no, not 15, but 5 and 3 minute supply zones. It can just bullishly break it and then have another run at some time. So, but yes, if you find enough reason to short, to fade it, let's say you have something like this. Let me take this out. If you have, let's say on the 1 minute where we are right now, it starts breaking and making, yeah, as so far it's making higher high and higher lows, right? But let's say now it puts in that swing low, and by taking out this low, this would be a lower. This is then considered a swing low, right? A lower high, sorry, a lower high. And if it does that, the next time it comes back into this area, could be a short position to go, a short opportunity. But
yeah,
don't
that's
don't
exactly what I'm looking at. I think that would be a
Okay.
good short.
Yeah. Yeah, I wouldn't recommend this uh for beginners, because going against the market is more difficult than just following the trend. But it is, you can, if you know what you're doing, it can be profitable for sure.
Yeah, it's clean levels on the 1 minute. So EU is I'll show my tree here. So EU is struggling, but it's still looking quite bullish. And what I like is the double bottom, or the W that we have here on the 1 minute, and it bounces on the 20 EMA, and then now we're reclaiming the neckline of that W. So I've moved my stops up a little bit more, and I think on the next push to the upside, I'll move my stops to below this area, and at that point, I will just let the trade be.
Nice.
All right, guys. So we're planning something big for the when we get 40K subscribers. We're about 400 people away. So make sure that you do click that subscribe button if you're watching. I know that about 30% of you are not subscribed to the channel. So make sure that you do hit that subscribe button, so you'll be able to. So we'll be able to launch that 40K celebrations as soon as possible. Yeah. I think at this point,
I
just a waiting game.
Yeah. um this sometimes it can continue to keep on grinding higher, and it's very difficult to be patient, and it will have that occasional, like, spike to the downside, but eventually just continue grinding slowly higher. And it's, you got to watch out for that. So if you're
Yeah.
long, just sitting on your hands and just wait for whatever your setup was to materialize, is sometimes doing less is better than getting out and in all the time.
I think most of the time, I mean, doing less is almost always better. I think in trading, it's like so. It's interesting because you talk to traders, you talk to people, and they're like, so why did you lose this trade, or why did this winner become a loser? It's always because they did something. They did something, and
Hmm.
if they didn't do that, then they would be making money. So like 99% of all the problems out there is because you did something. It's not because you didn't do something. That's actually quite rare in trading. It's like, why did this become a, what did this happen? Oh, that's because I didn't do anything like that. You don't hear that a lot. You
Mm.
usually hear, oh, that's because I made this mistake, or I made this impulsive decision.
Hmm.
um Now there is, of course, the opportunity, the times where someone will say, you know, yeah, I missed out on that one because I didn't execute, or I didn't take the trade, or I didn't sell here, and but most of the time we're losing money because we move the stop loss, or we move the TP, or we things like that.
True. Yeah, yeah, I agree. It's self-inflicted most of the time.
Yeah, and like Henry says, sometimes it's because we didn't put in the stop loss, but that should never happen. Okay,
uh,
I'm moving my stop loss up. So right after having that little speech, I'm actually moving my stops up. But it's time to secure this trade because we're now reaching a new level. So
yeah, the market on EU is trying to break out. It is at that level, but it's holding up nicely. So I expect it to continue.
yeah,
So far, it's not reacting. You know, it's not rejecting that breaking out. So let's see how it closes in a couple of minutes. I would like to show my screen, if that's okay with
yeah,
you, for a little while. What I see is this. If when you this is where the usefulness of the quasis come in, not only for the setups and so on, but simply just to read price. If I see this, we have a move coming up, right? And just reading this is the new high, so that is not a swing low. This is the swing low, right? You have that, and after it breaks this, right, this becomes the swing low, right? So that is the structure you have, and that you can see that as just market structure, but also you can see that as a quasi. And this is the relevant line that needs to break. This is the line in the sand where the market shifts from being bullish to being, this is on the 1 minute, right? Don't take it literally, it's going to be going down for a long, but the on the 1 minute, this is the line that tells you that it starts breaking the first structure. And if it does break that, right, what do you see then? If it breaks this, that's the neckline. So whenever it comes back to either of these structures, they can be uh, that's how I frame my setup. Those are the areas where you would want to be buying, not necessarily when it breaks down, but when it comes back after that a signal of breaking structure, then you look for that entry. And but so far, what can we see? It's not breaking the structure, right? Even if it's forming those bearish supply zones, but bearish structures or supply zones, even then it's not break. It's firmly not, it's holding that structure quite nicely. So I don't see a reason yet for price to, correct and go much lower unless it starts breaking those structures. And when you have this when you have what I mentioned at the beginning, Jonathan, that there are so many things happening when you're, reading price action, especially if you're on the 1 minute, that you have to try to, not you necessarily, but I mean for the viewers, for people in the audience, we have to focus on trying to simplify things into, okay, as long as it doesn't break this, there is no reason for me to short this
I'm just gonna
market. This is still
switch over to my screen here. Sorry for interrupting you, but I'll see. Oh no, it didn't hit that TP. It just had a. All right, come on, boom, hit it. Oh, that's so close. Really? Are you gonna reverse right there? Oh
I
my
don't
god,
think
come
so.
on. All right, there
I
we
don't think
go.
so.
That's the trade.
Nice.
Nice.
Nice, nice,
Yeah,
nice.
TP hitting live. So
Woohoo!
that's it, guys. That's how we trade CPI. All right, back to you, Victor.
That's how we roll. Yeah.
That's a nice
Yeah,
one.
very nice one. So this is the structure. What I was alluding to is try to make it simple. Instead of looking at EMAs and all three or five different things or even more, try to just look at one thing. What is the one or two thing, but if you can, one thing that will tell me that the market has shifted, that I'm wrong, or one thing that will activate my entry, right? If I think, okay, I want to fade this move up because I think it's exaggerated, because it's way overextended, what should it be doing? It should be starting. It should give me some idea that it's starting to break the structure. Otherwise, there's no way it's going to go. It's no way it's going to fade. It needs to break something for in order for it to retrace. So by focusing on something like this, like a structure, it can be something else. It doesn't have to be the structure. You can simplify and keep your mental acuity as high as possible by, as long you just have one test to check. You look at the market, has it or hasn't it broken this line? As long as it hasn't, I got nothing to do if I only want to be fading it, right? And by
Yeah.
doing that, you simplify your process, and you can keep your mind not overloaded with information because you try to read every indicator you have on your screen.
You know, I've been testing this. Man, I don't know how to speak today. So, I've been testing this. The take profit strategies and everything, and this trade was that a zero. So this was the trade that I entered on. I think this hit TP on Monday. We will look
Okay.
for a move up to that level, and that hit TP on Monday, and then we had the AD and CD short. So I actually took a new short on AD and CD today, and what's interesting here is, now we can ignore that candle because that was the news candle, but what's interesting here is I had my original TP as 0.79, but I moved my TP up to like 0.6, which commissions I had like 0.5, and that one actually hit, but the original one didn't hit. And then if you remember, I had two other trades yesterday on AD and CD where I managed to get out at break even. So this new way, like this new strategy, uh, I won all the trades this week, like 100% win rate, and going through the trades, they would all have hit stop loss if I didn't take TP at those levels, which is just, it's kind of mind blowing. So it might actually be possible that I'll have a 72% win rate with live trading, because this week has been 100% win rate, and if I continue like this, then easily I'll be able to come in at 72% win rate. What I've noticed though is, when I tested this in EdgeWonk, I just went through TradingView and the replay function. And what I've noticed is, when you're looking for trades with low R, uh, commissions might become a problem.
Yes, you have to calculate net profit. So not only commission but spread as well. If you're depending on the fivers, we have the luxury that spread are so, actually almost, not almost, they are zero a lot of the times, depending on
Yeah.
the pair you trade. But that's not the case on most brokers. You will have some kind of spread, and when you have depending on how much pip you're targeting, the lower the TP, the number of pips you're targeting, the more important it is to look for those minor costs, which normally are minor, but if you're scalping, they become significant. Commission can be 0.4 pip in terms of if you convert it into pips, but it can be as high as 0.7. That's a lot. I mean, if you think about it, how many trades you take, and you think about it in terms of how how, let me put it this way. In the end, what you're looking for when you're scalping, you're not scalping, your trades were bigger time frame, but if you're scalping, one of the important metrics is well, always, not only when you're scalping, but one of the metrics that you're trying to increase or optimize is your expectancy, right? How much profit are you getting per trade when you divide it by the number of trades you've still taken? And usually with scalping, it's not going to be very, very high, since your TP is not very high, and when you deduct the losses, the average or the expectancy will be much lower, and you will see that a 0.7 for spread, and perhaps well, not spread, for commission, and anything else on top of that, that can be maybe 20% of your expectancy. That's huge. And in terms of,
So how can I calculate and test that? Can I only calculate and test that through live trading, or
no,
is the
you
commission
can't.
is the commission set at a specific percentage, or?
No, the commission is fixed usually, so you can deduct it. You can, let's say and on EU, you have $4. Let's say on the The5ers, I think it's $4 per lot. So that means that it's 0.4 pips on an EU trade. That's the commission. So if you're only making, without commission, you're making 0.4, you're not having any profit. You're only covering the commission, right? But when is it 2 per lot? Let me check. I think I thought it was. I think it is 4. It's 2 per leg, I think, if I'm not mistaken. Let me check it right away. It is $4 per lot. Yes, it is $4 per lot, so it's 2 per leg. So you have to take that into account when make sure that you're counting for the commission, because let's say you have an expectancy of I don't know, if you're scalping, you could have an expectancy of 2 or 3 2.5 pips. If taking 0.4 from that can be almost 20%. That's 20% of your profits on a monthly basis on any time frame, right? So that's a lot of that can be significant, and that's
So commissions have never been an issue for me, because with the way I was trading, with swing trading and looking for the higher risk reward trades, commissions was never a problem for me. But now I'm looking at slightly higher lot sizes and lower risk to reward per trade, which then it kind of becomes an issue. So I think that's going to be the next step to see how that is affecting profitability.
You mentioned something. The higher lot size doesn't matter, actually, because if you look at it's about the expectancy, and whether your expectancy, let's say you have a 5 pip expectancy, that means that the number of the net result of your profit is whatever it is, net result divided by your number of trades, and that comes to be, let's say, 5%. Means on average you will be winning 5% on each trade, average. And whether that be higher lot size or lower lot size, it's still 5%, 5 pips, and that's the same with commission. So it's kind of, it's good to be aware of where does it eat in on my profit, and what can I do to minimize that, right? And we are in such a luxury on on the 5ers because they have $4 commission, and the spread on the majors on actually almost all of the pairs are very close to, they're either zero or they're very close to zero.
Yeah.
it's
Yeah, no,
it's
it's definitely spreads are, it's just incredible. Looking at GBP USD right now and EU, they're basically zero. So yeah, it's quite incredible. But yeah, it's going to be interesting to see how. And by the way, GBP USD, it's we broke down here, as you can see.
yes, I
Um,
was I was on my way to show the structure. Let me get that on for everyone. It's the same. I'm sorry. I saw that you have the same structure. That's by breaking this, right? There's no way to know when it's going to break it, but it's after the break that you can, okay, it has broken it. Now we have broken one structure on the 1 minute. Doesn't mean it's going to come down, but that's the first sign that it may have become what may later be might be the top, but don't jump the gun yet because this can be just a retracement. We'll have to see how it reacts to that supply zone. This order block, of course, is not present anymore, and to see, will it hit this? Most likely, I think. And how does it bump all the way up? If it does, then probably is going to continue. But if it doesn't, and I don't see any order blocks in this leg, the only one we have are all the ways to the top, and there are not many, not in the 1 minute at least. Let me see on the other time frames. There's one interesting order block here, so you could have that as a reference. And on the 5 minute, oh, now this is looking nice. You have 5 minute and the 3 minute both indicating the same area where the line in the sand, right? If it breaks this, then we're long again. But as long as it comes back, we interact with this and then starts breaking down, that's the area you want to be shorting. Although shorting against the direction of the initial move is always tricky. Something like that. Let's see. On the 1 minute, you only have, I think I saw this area, which also is in the same area. So we'll have to see. We'll have to see. But that now it starts getting, no, this is more interesting because it's giving us more information. It's breaking one structure. We didn't have that before. And we'll have to see what it does when it comes back. If it's interested in what does it do here? This is what I want to be looking at the price action. Does it start forming, wicks to the upside? Does it start forming engulfing outside bars, bearish ones? And if it is, that could be a sign, market is trying to form a top here, either a temporary top or a bit longer term top. Although this is only what has passed. We has what is it? Only an hour and 15 minutes almost. So it can still continue the rest of the day. This not necessarily need to be any kind of a top, but just for the couple of maybe an hour or so until it continues to go. But this is interesting. This is very interesting.
yeah, what's very cool is the fact that I caught the top of that EU move, but if we look at trading view here again, I mean this is it's time to perhaps go long here again with this break and retest here. If you look at the 1 minute, that is a beautiful break and retest right there, and I think I might be a bit too late on this one, but a move up to these highs, that would be a great scalp. And I wish I saw this just a little bit earlier, like 1 minute ago. Then I would probably have entered on that candle close. But now also we got like 50 minutes left of the streams. I feel like I don't want to be entering any new positions right now anyway. So I'm gonna be.
Yep.
But I'm gonna try to, after the live stream, I'm gonna do some calculations to see what I'm gonna see what the risk to reward needs to be to taking into consideration the commissions. Now I know it's not that high, but still think it's important to factor that in.
um, I think the metric you would be needing is the expectancy in terms of pips. When you have that, if it's above 10 or above, because the commission is 0.4 pips, so just if it's above 4, it's 10% your profits. If it's about 8, it's about 5% your profits. So that's already gives you the idea. If you have that metric, right away in 5 seconds, you know what the effect is of the commission on your profitability.
So
And
the
how,
commission is 0.4 in pips.
yes, it's $4 per lot, but if you calculate
Okay.
it, that turns out to be 0.4 pips.
So
And that's on
if I
EU.
know the expectancy in R, um,
uh, you'll have to have it in pips, not in R in this
in
case.
pips, okay.
Yep. Yeah.
All right. I don't think I have that in the experiment, so I'll have to go through my trading journal and find that
But
data.
do you have the total pips?
No, I just
Okay.
calculated the R. I don't think I had
Okay.
the
Okay.
total pips for
Okay.
that,
Okay.
but I'll
But maybe Edgewonk has it somewhere.
yeah,
You can
I'll go through it and I'll
you
see
can
what the
you can also just upload it to my FX book, and it will give you the amount of pips you got from those trades. And you can also set it. Let's say it's an account you have been trading before with another strategy. You can set the start time of the measurement. Selected period, and you say, okay, from last 30 days, what is just and analyze the trades from last 30 days, and it will give you those metrics right away. If you upload it, you can also, even if it's within an account that you're been trading different strategies, you can select. You will have to label them or some kind, have a filter that it knows which, to identify the subgroup correctly. But it can be done very quickly on my FX book
yeah.
without you
So
going
the
through every
yeah.
trade.
No, I'm gonna look that up, but I think um, yeah, I'll see. I think what I'll have to do is, because I don't have the data on the things that I've tested, because I have I do have the data um on the stop loss though, and if I have the stop loss, I can then calculate what the pips is on the winners, if I know that the winners are half an hour, because obviously it's just half the pips of what the stop loss is.
That is true. That is true.
I can just go through all the trades and I look at all the winners, and so all the winners has half of the stop loss. Yeah, I'll look that up. That should be simple,
mhm.
and then I'll get the average. I'll get the pips of all the winners, and then that would give me the expectancy in pips, and then I know that for every trade there's a 0.4 pips in commissions.
Yes, but it's not only the winning trades. You have to add as well the losing trades. Get
Yeah, I
the
know, but the losing trades, what I'm saying is like the losing
You
trades are,
already have them. You already
yeah,
have them.
exactly.
Okay, I understand.
You just need to do the calculations on the winning trades.
Yeah. That's the missing data to be able to construct the expectancy. I understand.
Yeah.
Lag or lag. I'm not sure how to pronounce your name. Excuse me if it's not one of those two. Asks, do you do entry calculation on my FX book? I'm not sure what you mean by entry calculations. Let me think. What could it be? I do analysis, my entry, but not on my FX. But my FX is so simple and it's so easy in terms of how you can get basic statistics on a lot of things. It's zero point 0.4 pips, not 0.04. Um, Yeah.
Yeah, point 0.4. Exactly.
Think about it, because one lot, what is the value of one lot on EU? One pip, what is, I'm sorry, what is the dollar value of one pip when you have one lot on, right? It's $10. Every pip is $10 move. So if you know, if the information that is given is that it's $4 per lot, and you know one pip is $10, so $4 would then uh, calculate into $0.4 per, or I mean pip, for each trade. That's the commission when it's $4 per lot. But there you have, that's not the case with many brokers. You can have six, $7 $8 per lot.
I can't
So as
believe
I
EU
said,
is just breaking out. This is crazy.
yeah, it's very strong, very strong. And you see that GU is not going with EU, right? It's not coming back in terms of, it's making a swing low. I'm sorry, it's not making it hasn't come back, and it's continuing to go lower.
That's interesting.
Yeah, but it has some, at least to me, it makes sense to me, because in terms of structures that it broke, it already broke a major supply area there, and it continue. And even though it hasn't reached this yet, and I suppose it will reach, perhaps it will reach later this day, maybe, that it takes a breather from these areas, is completely not complete, but it makes sense to me. While EU hasn't broken any, when you have the move hasn't broken any structure yet. The structures are, as I said, the weekly is above here, and the other structures are higher up. So yeah, it's less extended in terms of structures. It can break. It hasn't
So
broken
I'm
anything.
looking at this trade on NCD CAD. So the profit is 13.7 pips. So
Okay.
removing 0.4, it should be 13.3 pips, right?
Yes, but you should do the calculation on the expectancy, not on individual, because you still have the factor in the losses, and it depends on the win rate. So, but yes, in comparison, it gives you an idea. When you're aiming for 20 pips, the commission is very not very significant. But if you're aiming for three
Yeah,
pips,
that's the
then
thing.
the commission
It's
is,
like nothing.
it depends. No, not necessarily, because you can have TPs of 20 and your expectancy is still 3 pips, right? That's possible. It's not
Yeah.
very I mean, it depends on the how many pips you get per trade on average. Depends on the expectancy. The TP does not tell you right away what your expectancy is. You can have any kind of TP and still have an expectancy just above zero if it's profitable.
Yeah, that's right. I think at this point, I don't
If
think it's very crucial though.
No, if from what I know how you trade, I don't think it is,
Yeah, no.
because
So maybe I don't think I have to do that test. I can just wait for the live results. Because I don't think it's like that crucial. I can just look at the live results and then look at what I'm actually paying in commissions.
yeah, yeah.
All right, guys. I think we're. I think it's might be time to end the live stream. What do you think? We've had a couple of good trades here on CPI. It's been interesting. I think this was very relaxing. We got a nice flow here, talking about the news, doing some live trading. I really do like these sessions. It feels like Um, yeah, I like listening to you when you break down your concept. I'm learning a thing or two, so that's awesome. I hope you guys, I hope you guys watching are learning as well, because I'm um, I'm learning a lot just by listening to Victor here. Next
I,
week, I'm going to be on vacation next week, so Victor is going to take over, and he's going to be the main host here while I'm gone. And I believe you're going to have we're going to have Rich on as well, right?
yes, yes, yes. We will definitely have Rich on, a great trader, by the way. So I'm thrilled to, have a conversation with him and see what he can, share, or what insights he have to share with us. And yeah, I think that's a great, that's going to be a great conversation with him.
Yeah, and I'm gonna have Dirk on as well. So you'll have Rich and Dirk, and I'm pretty sure Alex is gonna be there for a couple of live streams as well. And hopefully, I'll be able to join from the laptop from the beach. Hopefully, I get some amazing weather, and I'll be able to jump in a live stream from the beach.
What I at the beginning of the stream, I mentioned the DOM, and here, as you see you can see the depth of market. The first icon, not the second one, on each chart. If you click that, it will open the DOM, the depth of the order book, right? So you can see live at what level, what volume there is currently. And what I
Nice.
use it for is, you have a button on buy and sell, which is just one button, of course, and you can have the volume set in advance, and you can also
Oh,
have your yeah, yeah. And if you can have your TP already set in, and your stop loss, right? And you just have one click. I mean,
wow! I
it's
had no idea about that. That's really good.
yep, yep, yep. I saw this from Saul, to be honest, since typically I'm not a scalper. I haven't been a scalper in the past for very long. So and even if the TP and stop loss is not the one you're going to be using, at least you have something on that is
Yeah.
close to what you typically take, and you can always adjust it after the fact. After it opened, adjust it to the structures if that's how you trade. But at least you have, right away, with one click, you have the stop loss and TP put in, and your volume cannot go wrong because the volume is
Okay,
already
that's
there.
perfect when scalping.
Yeah, and you have the middle button to close it up, one click. And it's a big button instead of the X that you can see when the trade is open, right? The
Yeah.
X is kind of smaller, so there's a little bit you need to watch out where you click, right? If this is bigger. Those are
Nice.
that's a if you want to get in and out of the market, this is very, very helpful. And while I show my trades as well of today, that I scalped behind the scene while you were scalping. Not much of, and you can see the commission here, right? $4
Yeah.
and I'm doing one lot. Um, so yeah, that's what I wanted to share. Yeah.
All right, great stuff, Victor, and thank you all for joining today. And I hope to see you all next week. If I'm not joining live, I'll make sure to actually watch the live stream and follow along in the chat. All right, Victor, I'm going to leave it up to you to end. If you because you're probably going to be doing this next week. Do you know how to end the live stream?
Yes, I see a button there that says end, so I think it is that.
You want to do the outro. If you go to
Oh,
brand, you have video clips, and then you have outro, and then you want to try to
oh,
like time it so that when there's like 10 seconds left of the outro or something, or maybe 2 seconds or something, you click end stream.
oh, there is an extra step that I was unaware of.
Yeah, let's try it now. Let's try it live
All right,
here.
all right. So, guys, I'm thrilled for next week. We will have Rich on, and Dirk, you said, right? Dirk as well.
Yes.
So I'm very excited for next week, and I hope you guys are as well. And I hope you guys hope to see you there next week. So join me coming week. On that
Perfect.
note, be safe tonight. Remember this FOMC coming up, so don't go
That's right.
crazy on your trades yet. It's not over. High impact news can still come in and change the market. So with that said, be safe, and till next week.
Take
Bye
care.
bye.
Hi guys, so thank you very much for watching the video. Now make sure you like and subscribe, and most of all go into the YouTube and check our other content that we provide here at The 5ers. We'll see you in the next one.